Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the Forex Weekly Review for the week starting on 10 to 15 of June 2018. Previous week started slow, ended up very beautifully, and most of the pairs that we have been following on the previous week analysis and review worked out and moved as we wanted to see them. And now we are on some levels that we wanted to see, and now it's time to get ready for the next movement. But first of all, first important note, the fundamental week. This fundamental week is going to be very busy and comes with many news that can affect on the technical view. It starts slow on Monday with the manufacturing production mainly. Everything happens after the G7 during weekend here in Canada. Then we have the average earnings, and it starts to warm up. CPI and core CPI in the US, which will show how stable the numbers are for the Fed to be able to increase the rates further on. And Wednesday it is CPI in Britain, PPI in the US, and it comes with the FOMC economic projection statement and the funds rate. It will follow up with a press conference, of course, then the unemployment and employment change in Australia, retail sales, and the rate in Eurozone conference, retail sales in the US, monetary policy in Japan, and the conference. Very busy week. So now let's go to the technical and see what are the best pair to focus. So first of all, the majors, of course, they are very interesting with the levels and the opportunities they provide. The first one is the euro dollar, is the first pair we always follow. Basically, the euro reached our level on the short that we wanted. After that, we expected the previous week to see this correction, and this correction currently goes on. Now it's very important to remember that according to the weekly, the last divergence over the weekly is bullish. So far so good, right? Bullish hidden, of course, which means possible trade continuation. However, on the same place after this cycle, and the idea of the fake breakout here, false breakout with a bearish divergence, the euro creating lower low is a convergence, and that's where the views separate. We don't have a clear view from the weekly chart, and therefore we're looking at a daily chart. Daily chart now is creating a bearish divergence. So that's where it normally tends to go to the bearish side, two views versus the one. And if we break the euro dollar into something like that, we would figure out that the two blue lines we have, that's double cycle here, and the second leg of the blue cycle is a cycle by itself, which is triple. Therefore, and this is exactly why my view is that the euro will try to do something like that before we are looking for sells, which in simple words means for the long term we want to see this rally continue happening, holding, so we can go and time ourselves later on. We drop lower on the lower time frame, and we figure out that the euro dollar is currently in a double cycle, which has for us, which got us the first clearance area, the 118 that we have been following. It's cleared, and now it will most likely start to form for us sell opportunities. So basically, the way I see that here, or if the euro dollar managed to take a slightly higher to 119, 120 area, these are the zones where we should focus to look for our sell setups and sell opportunities. Okay, so that will be the place to start and look for the sells. Now, on the short term, of course, because of the scenario I showed before, there is a good chance that we will see some bounces and attempts to go higher. That's a very strong possibility, especially with the news we will face this week. But for the longer run, the levels I've mentioned, these are the levels where most likely the euro dollar will start to build up its next sell portion, and I think it's stronger. Pound dollar, same story. The last divergence that we have for this pair is a bullish hidden. So far so good. There is only one problem with that personal problem I have, is this is one leg, and that's why I would not be surprised to see the pound dollar forming up an opportunity to go and see another low before it will later on turn long-term bullish. So the way I see that, the pound dollar created for us this kind of movement, and on the short term, very likely we will see the pound dollar try to push slightly higher towards 135, 136 before it will turn around. Exactly like with the euro dollar, short-term attempts to go higher are definitely acceptable in the current market conditions. From the next higher levels we will face, assuming we will face them, we will be looking for the next portion of the sells. Now take a reminder here that this is a cycle that we've had on the 4-hour chart. 23 ticks, the Fibonacci, the first Fibonacci level was cleared. There is a good chance it will try to clean the 38.2, which is, as mentioned before, around the 136, and from there to try the clearance. So that's my view for the long term. I would not be surprised to see another attempt for short-term rallies before the bears will take the control, and they most likely will for the longer run. So for those of you who are in the conservative trading view, if we get the next highs, it would be a great zone to start looking for longer term portion for sales. For those of you who are more into aggressive and adventure approach, this short term drops could lead for further continuation. Euro versus the pound, one of my favorites for the long term, basically did not change nothing of its behavior, and as I follow for the last several weeks, rallies to be sold, that could mean rallies towards the top of the range and sell, and that could mean easily new high to 089, 090 and then sell. So for me, rallies that create bearish signs like bearish divergence, false breaks, rally and then a trendline breakout to the downside, they for me would be the opportunities to go and to look for the long-term sells. And on the short term, I really have nothing clear currently on this pair. Dollar yen so far follows our plan exactly as we wanted. We wanted to see this rally taking place during the week, then bearish sign for divergence above the 110, and boom, 100 pips to the downside on the last days of the previous week. The question is what's next. So for the long term, we are still here some kind of a range. As long as this scenario holds, and basically as long as the daily trend line holds, this fight is expected to continue. So don't be surprised if on the short term we would see some bullish attempts, some bearish attempts, some bullish attempts, some bearish attempts. It is typical and normal in such conditions. From my point of view, I would still want to see this triple cycle to the upside correcting deeper into double cycle, or at least continues its movement inside the channel, which could be this way, of course, or this way. Okay, so I don't expect anything over dramatical at this stage. I might be wrong because we have big news coming this week. It starts with the FOMC and it continues with the monetary policy in Japan itself. Such news could, you know, change the whole technical view. But the way it is right now, at the for the beginning of the week, I don't think we will face anything too crazy. And my view remains the same. If we get these rallies to the top of this range I just draw, it's great to look for the sells. And if we successfully go to the low again, forming the second leg, it would be good enough to look for the buys. I wouldn't deal with that for the very long term at this stage, but short term definitely interesting and good enough to work it with. The next pair on the list is the Aussie versus the dollar. A pair I like, a pair that has for us a double cycle here, a pair that has for us a triple ascending cycle, and a pair that I expect to do something like that. So the way I see that on the 4-hour chart, we were facing triple ascending cycle, and the last leg is a triple cycle by itself. The normal moves in such cases are something like that, and further continuation. So we have a trend line. If we get closer to the trend line and manage to hold that, I think it would be very smart to look for the buys, and the targets for this pair would be the final target for this pair would be the zone of 0.7750 up to 0.78. This is my view for the Aussie versus the dollar. Aussie versus the Kiwi is another pair that I love. For me, for the long term, I am still, due to these market conditions, am after buys, which means on a daily chart I would want to face buy opportunities. Currently the pair is building up some bullish hidden divergence, and this is the area 108 down to 107.50 or 106.50 as the area where I would expect the buys to take place. Dropping to the lower time frame, we can mark this expanding conditions, and these would be our areas where I would be expecting this the reverse 1, 2 and 3. Okay, if this area holds, boom, we are after buys with the reversal. Of course, we are looking for the reversal signs. If the next zone is the one to pay attention to, so something like that, of course we want to see a bullish divergence, then it should be around the 107, and from there we'll be looking for the last trend line breakout and continuation. So basically what the whole idea here is get this cycle, the current corrective cycle that we face on a daily and the 4-hour chart time frames, and look for the levels there, look for the bearish evidences, the bullish divergence, the bullish reversal, false breaks, trendline breakouts, and these are our opportunities. The next pair on the list is the Kiwi versus the Canadian, a pair that we have been following from previous week. Did not do much this week, but I love the evidences here. We are facing fake highs, we are facing bearish divergence, we are breaking the trend line. From my point of view, we are going down. Even if that will provide us another attempt for high to 0.92 or so, for me it is sell. Sell your bearish setups that you will get with the bearish with the strategies that you use. From my point of view, this pair is for sells, even if it will try to create one more fake high. For me, it is heading to the downside. Let me check here. EUROCAD, well, nothing currently for this pair. It worked perfectly as we wanted the previous week, so I really don't have much here. Euro versus the Aussie is a very interesting opportunity from my point of view. The way I see that, we are getting for another reversal to the downside. So the way I see that is something like that. On the 4-hour chart, we got this kind of movement. which we can break into double cycle here. It has many variations of breakthrough. It could be something like that. Really many variations. The way I would want to see this pair is basically making one more high for us, or at least moving inside a range, and then look for sells. So two options, 1, 2, okay, and the second option, where did this come from? And the second option is this. That's how I would be looking to trade this pair. Note that on the short term there is kind of a expanding wedge here, so it could really try to reach the tops here, make some clearances, which it did cleared few of these areas. It could go and clean the next area, and from there prepare itself for the bearish long-term run. So EURUSD new highs, we will be looking for sells. That could be around the area of 156, 157, or if it holds the range, then drop another push to the top of the range and sells. That's another great opportunity from my point of view. Gold and silver don't do much. I would want to see the breakout of this channel. If we manage to break that and hold, this could turn to be a good buy opportunity. And on the alternative view, if it holds the bearish run, we break down, the next areas for us will be 12.8, 12.60 according to the daily chart. That's our zones where we will be looking for the reversals. I would not be looking to deal with any long-term sells here. I would be definitely looking to go with long-term buys if we create new lows. And same with the silver. Basically, it finally broke the channel here that we got, the triangle that we were dealing with. So from my point of view, it is still for buys. Oil so far going perfectly, and the view remains for us bearish. Sell the rallies here. This is the plan for the oil. Every rally we should be looking for sell evidences and go for shorts. The way I see that, not too much choices for the oil at this stage. Indices, we don't have really nothing new. I remain bearish in my view with the German DAX as long as this high holds. This is my invalidation area, and for me, I am after sell setups. With the strategies that we use, that you use, you should be looking for the sell setups. The next interesting one is the NASDAQ, and it is interesting because it had one false break before. It might go and create a second false break on the coming weeks, which means it could be a monster building up here. We would like to see the follow-up with the weekly and the daily and the 4-hour chart, which means the ideal scenario would be, of course, if we get the false breaks and lower lows, and then we would be looking to deal with sells. The alternative for such scenario is if we get triple cycle down, double cycle up, and breakout, and then we would be looking for sells. It's not here as for the beginning of the week. It could go and form on this week or the coming weeks. It looks simply good technically. Don't rush. It's a very common mistake to say it's 100% going to happen. Don't rush. We don't want to find yourself in a situation when you pray to the market to prove you right, and instead it does prove you wrong. So wait for the signs. We have the level, we have the confirmations with the divergences. Wait for the setup. Wait for the technical setup to happen before we go into the position. And the final one is Kryptos. We have the Bitcoin in a big triangle, trying to decide what's next, and we have it on the short triangle as well. So this is something I would pay attention to. Break to the upside could lead further rally, so something like that. Break to the downside would lead. This is the first and this is the second view. Could lead all the way to the bottom of the daily range before the rallies. So it is definitely one I would be looking to work with. The way I see that, at this stage I would be avoiding trying to short even in the short term and look for the next possible buy setups. I think, and I might be wrong here, but I think it's safer and smarter putting all the things together. It could make the low. I just say that I would skip that, because the way I see that currently, every drop to follow, if follows, should be the one to bring in and refresh the next bullish momentum. So that's basically all for this week. Thank you very much for watching. On Monday I will be publishing my weekly review PDF, so come back on Monday, and on the section below, on the comment section below, and in the description I will publish the link, or just follow up the newsletter. I will send the email with the link, of course. If you enjoyed the video, please show your support back, hit the like button, leave your feedback below. If you have any question about any of the instruments which I didn't cover and you want me to cover it for you, no problem, let me know on the comments below, and I will try to cover that as soon as possible for you. I wish you a wonderful trading week. Thank you very much for your time watching this video. I hope you enjoyed that. You can feel free to share that with everyone who you believe can have a benefit from watching this video. That's all for now. I wish you a wonderful week and best of wishes. Yours, Vladimir Ribakov, Traders Academy Club. Ciao for now.